Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down all of the notable moves across financial markets in 20 minutes or less. We publish these shows every Friday, so make sure you are subscribed to the channel, tune back in on the weekends, so you're always prepared for the week ahead. We're going to jump right into things today. Hope everybody's doing well out there. Thanks again for joining. The story of the week is bears fumbling once again. And this is now probably the fourth time where sellers had a good chance to kind of take a good swing out of this market, and they weren't able to. There continues to be this theme of markets worrying and having anxiety on the overnight or the future session and overnight pre-market. But as soon as the market opens, that 9:30 bell rings, the lights come on, the roaches scatter, the sellers are gone, and the market seems to just float higher. And we saw that on Tuesday, and we saw that again on Wednesday. Wednesday especially felt like a notable session because we had hot econ data. We had the CPI report come out, and markets' initial reaction was sell equities, interest rates, yields climbed, and again, once the bell sort of rang, the dust settled and the markets proceeded to catch a bid throughout the entire session. So they proceeded to eventually get this market broken out. Indexes at new highs. Congrats to the longs there. We're going to talk about that short thesis that we outlined last week. I want to tell you about how I traded it this week. We also had the dollar index breaking down. We've got the 10-year treasury yield back below 4.5%. So with yields down, dollar rolling over, that's a good recipe for stocks, and they certainly took advantage of that this week. We also have markets closed on Monday, President's Day, so it's going to be a short week out there next week. Probably a little bit quiet, not a whole lot of data. Still got some earnings going on right now, so there's still some individual companies reporting, but it should be a pretty quiet week next week. At least that's what it seems so far. Now, before we get into all of the action this week, our video today is sponsored by Investors Business Daily. You can check out some links we've got down here for their IBD digital subscription, their market surge platform. I use them both every single day. So check out the discounts, the links that we have in the description of this video and that you see at the bottom of your screen. And with that, let's get into it. All right, here we go. We've got some charts in front of us. Warden TC2000, that's the charting platform we're using throughout this video. It's a platform we support here at the Trade Risk. We've got lots of downloads available, tutorials available as well for this platform. If you're a new user, check out the links in the description of this video. Lots of the layouts, indicators, and things you see throughout this video are available on our website, thetraderisk.com. Let's get into the numbers here. 1 week returns. You can see mostly green across the board. Nasdaq 100, the big standout here, up almost 3% this week, taking charge. Russell 2000 was slightly negative, but basically flat this week. You can see volatility came down across the board. You can see the VIX now below 15 going into the weekend. First time we've seen that in quite some time. If we take a look at our sectors here, it was a good broad-based sort of winning basket of sectors here. Tech was at the top, communication services number 2, and then materials at the 3rd spot. On the downside, it was healthcare, financials, and industrials. Those were the laggards this week. Healthcare was down a little over 1%, really the only thing kind of standing out in the red so far this week. Now, if we take a look at our sector trends here, we didn't have a tremendous amount of changes going on here. So this is our smart trend filter indicator. It measures price and volume spanning across time with some price action relationships. And you can see that most sectors here, this is a sector grid, most sectors here are in a uptrend on the daily chart, or at least are trying to transition into that uptrend. You've got energy here kind of chopping it out in that yellow state, biotech as well, healthcare as well, but most of these are coming off of buy signals. Industrial's a little bit weak though. Same thing with discretionary. Now, if we take a look here at our market breadth screen, you can see that, we are still seeing a pretty subdued period, but we finally got an uptick here on Friday. So Thursday, Friday, if you take a look at the 1-2 punch, we finally saw some of the most number of stocks hitting 52-week highs that we have in quite some time. So that was encouraging to see. Again, we want to get more, kind of built on this next week. So we had kind of breakout weeks for the indices. Let's see if next week we can add on to that. Let's see if that, breadth can continue to pick up here and we get more than just the top 100 stocks leading this market. We get, 500 stocks, 1,000 stocks really moving to the upside. The other slightly encouraging thing here too is that the right here is we're looking at the number or the percentage of NYSE stocks that are trading above their 50 SMA. And now you can see that ratio breaking out to new highs here or trending up to new highs, up around 59%. So getting into some, pretty firmly bullish territory here, not very stretched or extreme, but really sort of just getting a little more participation underneath the hood. So I think that's pretty positive overall. I still want to see more stocks hitting that 52-week high list. Now, if we take a look here at our macro slide, you can see this was kind of the big winner this week, to be honest. It was the dollar index rolling over, and it was the 10-year treasury yield giving up those early gains. So if we take a look here at the dollar index, you can see in the top right chart, you can see that we are starting to, kind of break down below to new multi-month lows. That's encouraging. You do have a big gap down here, actually. So this chart is still a little distorted, but still, making new relative lows. And the 10-year treasury yield, again, had that knee-jerk reaction up, and now it's starting to fade. So we really want to see this kind of continue its trend down, continue to get that pressure off of the stock market, just generally speaking. And so with dollar index rolling over, 10 years rolling over as well, that's a pretty good recipe for stocks to start to benefit pretty nicely. If we take a look at our commodities list here, you got Bitcoin at the top of the list up 1.5%, copper, silver, gold, all enjoying moves up this week. Energy, specifically USO, I believe natural gas had a nice move this week. But if we look at USO here, it's pretty flat, to finish out the week. So let's get into some price action here. Let's take a look at the S&P 500. We're going to kick it off here with the cash settled market. And if we look at the weekly chart here, this is a pretty powerful looking weekly chart now. So last week we were talking about waiting for the confirmation, waiting for the move, the breakout, the resistance to finally be taken out, or the downside, or the former support to be taken out. And we are starting to get the former here, where the buyers are stepping up. We're finally attacking these cluster of highs. This is a new weekly all-time closing high for the S&P 500 at above 6,100. So that was nice to see. If we go down to the daily chart here, you can see that Friday, we left with a little bit of a lackluster session here where we gave up some gains and kind of closed with a doji. But if we just zoom out now, you've got the ingredients of some consolidation that has really sort of, worked people sideways, kind of tired them out a little bit, me included, on a short trade that we were trying to attack on the Nasdaq, not the S&P 500. But needless to say, we finally got the breakout going underway here. So you've got this little kind of downtrend line that has finally been broken. You've got the prior highs here, and it was really Thursday's session that convinced that or solidified that. You had a 1% up session, nice expansion in range, slight increase in volume here, and we are trying to attack and hold on to these highs. So as it stands right now, bulls have the dominance, they have the control. Now we're going to just need to see if they can hang on to it into next week. Again, we don't have in theory a whole lot of catalysts next week. We've got some earnings, but of course, this is a fast-paced, volatile market just from a new administration perspective. So, we should still expect anything. Markets are closed on Monday, and if we just take a look at our big levels now, we're just going to want to see these highs attempt to hold here. I mean, on a daily time frame, you can see we kind of did lose a little bit of ground here on Friday as we poked our head to these new highs. But on the weekly chart, we did get that weekly closing breakout. So it's kind of, not exactly the most convincing daily all-time high here, but it's still, again, something we can hang our hat on as a victory for the bulls. If we just take a pure, kind of short-term level of price, I would say 6,000 is going to be an important one going forward. forward, that's roughly the pivot low here from Wednesday. Wednesday was CPI day, right? So that's when the market kind of came in really worried about what was happening here with in terms of inflation and rates in for future, and they shrugged it off and rallied us throughout the session, and then we got that follow through day on Friday. Let's take a look at the Nasdaq 100 and let's just illustrate the gap downs that we've seen over the last couple of sessions. Now we could have done this with the S&P 500, but we had a big gap down right in here. This was Wednesday, of course. This was on CPI. We had a gap down on Tuesday, a little bit more minor, but still a gap down that ended up getting bought up. We started the week on an up note, so that was where things got thrown off a little bit from that Friday loss of momentum, right? So last Friday, we really did have a little bit of a fear kind of session here with this candle where we had this bearish engulfing day where we rejected at those highs. And really, we were looking for follow through to come into this week, and we got the exact opposite. We got that pop up. However, Tuesday gave us some hope on the gap down, but that didn't stick. Wednesday was the day. This day here, this gap down, just to reiterate for the third time, this is the day where this market really should have been able to crack and roll over here. If there were some good sellers in this market, if there was a lot of frothy kind of pent up buyers and momentum in this market, this is what really should have pushed things off sides, but it didn't. It got bought right up, and we ended up closing strong. So I posted on X, I replied to the last video update for Stock Market Weekly that I covered into the close here 2/3 of my Nasdaq short. So last Friday, in last week's update, I discussed the short trade I took in the Nasdaq, which is something I don't, again, normally do. But into last Thursday's session here on the 6th is when I put on this short in the Nasdaq here, and I was celebrating for basically one session where I in theory had nailed pretty close to the top, and that didn't last long because I didn't cover anything here, it didn't cover anything here, and then on this session I said, you know what, my original plan was to basically stop myself out above 535, but I don't need to be told 8 times that this market does not want to break down with yet another gap down that failed. So on this session here, I sold 2/3 into the close, left just a third to say, you know what, let's just see if we get one more rollover attempt. And then on this gap up on Thursday morning, I sold the rest, or covered the rest of my short here shortly after the open. All in all, basically, probably a small loss. It was probably a scratch, but let's chalk it up to a very small loss and just a lot of frustration. So no longer in the short Nasdaq 100 trade. Took my shot. Sellers could not break this market down, and off we go. So now, when we look here at the weekly chart of the Nasdaq 100, it is similar to the S&P 500. You finally now cleared above these recent highs. You got a new weekly closing high here for the Nasdaq 100, and now it's just on the bulls to maintain momentum, to maintain some of these breakout levels going forward. For the Qs here, I think if you can stay above 534, then you got to just respect the trend that it's moving up. You could really kind of flag that it's just challenging these prior all-time highs up here from mid-December. So you could get a little bit cute here on looking for some type of reaction, getting above the 540 area. But for me, it's cleared the bulk of this supply. This is kind of the big level, this 535 zone that I was basically keying off of as my initial stop loss. And that's pretty much what I'd use going forward. If we're above here, then I think you just have to give the benefit of the doubt to the buyers now. So you've got a lot of supply in here. If this turns into a continuation pattern, you could get a pretty good, powerful move that could take place here. If we start rejecting below 534, 535 area, then maybe you can, act quick and maybe hedge yourself back up. But for now, I'm out of this trade. I took my shot, took my loss, and that's what happens when you're shorting uptrends. It's very tactical, and you got to be able to adjust and manage risk pretty carefully here. So Nasdaq 100 looking good on the breakout. Russell 2000, kind of still just chopping around in no man's land. I don't have too much else to say about that. The Qs look like where things are really, picking up some momentum. So that's the way I'm looking at the indices. Let's take a look now at some of the other majors. Let's take a look at gold, which has basically been trading like a tech stock recently. Look at this uptrend in the past, from the lows of January here. We've gone up 12% in I'm sorry, this is basically a month and a half. We're up 12% in gold, cherry picking the low here, but this shows just how much momentum and how much has been piling in here in gold. This isn't new. We've been talking about it for some time. Look at the volume that is continuing to increase here. Obviously, it looks like we've got a little bit of some exhaustion. Some sellers are starting to come in here. So let's see if this can pull back a little bit, maybe into the mid 250s, low 260s, see if it can base around, put in another higher low, and maybe set itself back up in a few weeks. That could be a good potential continuation pattern for there. But for now, you just gotta be a little bit cautious in the short term if you're chasing that. But congrats to the buyers there in gold. It has been a fantastic place to be over the last 12 months, 18 months or so. USO, not quite the same. This consolidation is still kind of pulling us back, grinding us lower. It's a good magnet here. Weekly chart, I mean, you've got a lot of supply in here. It's kind of just right back to the middle of its range. This looks like, again, a longer term holding pattern that could turn into something a little bit more explosive. For now, though, gravity is here, and buyers just can't quite make the corner here for USO. We had a little attempt that faded up. We're coming back down to these lows here from just a couple of weeks ago. So maybe something to keep on your radar, but for now, momentum is definitely a little hard to come by for gold. Now, let's talk about rates real quick, and then we're going to go to China. So if we look at the 10-year Treasury bond, you can see that this was the head fake on Wednesday. This was the gap down for the 10-year Treasury yield. You can see, or Treasury bond on Wednesday. This was right as that inflation data was coming out on Wednesday. Markets kind of panicked, rates spiked, and then Thursday and Friday off to the races. We had PPI, which did relieve some of that on Thursday, but still a very impressive kind of whipsaw action here for interest rates. And if IEF continues to move up here, then again, life looks pretty good for equities. TLT, similar dynamics. Wednesday has a good whipsaw this week, basically V-shaping midweek and catching a lot of people off guard there on those rates trades. Now, if we move to China here, China, we talked about China for, a couple of weeks continuously back in, I believe, late 24, and then it kind of fell off our radar. But here it is again. I mean, it is really perking up. It's, come back strong this year. It's up 20%. This is the FXI large cap ETF. It's a little bit stretched in the short term, so it's a tough chase right now, but these are names that you could probably fish from, add to a watch list, wait for setups, wait for pullbacks, consolidations, those types of things. But FXI certainly, catching a nice bid this week. Same with KWEB. These ETFs, up 10% for KWEB. FXI was up 7%. So CQQ, another Chinese tech ETF here, up 9%. So and some decent volume coming in there. So very impressive move on the China front. Now, before we call it a day, let's take a quick look at Bitcoin here. So Bitcoin has surprisingly gone pretty quiet here, right? So we've had a lot of excitement now this week with the Nasdaq breaking out and moving to new highs, but Bitcoin has been pretty reluctant and stubborn in this range here. So it has gone sideways now for 10 well, I guess depends if you're looking at IBIT or not, but Bitcoin spot price basically 10 days flat between 95 and 100K. So this spring is coiling right now, and Bitcoin is absolutely getting ready to make a big move. Question is that move going to bring us to 106 and retest the old highs, or is it bringing us down to 90K and into the 80s on a move lower? That's going to be the big question here. But right now there's a lot of kind of pent pent up, tightly coiled price action here. And, it's something worth paying attention to. There are some individual stocks that are starting to set up. I was nibbling on some of those on Friday. I'll spare you from the specific names, but just some of the Bitcoin related equities. Just was taking some positions in just to see if we can get this breakout moved. If not, I'll step aside pretty quickly. Our long-term trend following system, though, is still very much engaged in Bitcoin. I still think this is, one of the clearest trends that still has lots of long-term runway. I still think it's, kind of a top trade idea of mine. It has been now since the ETFs basically got approved. I felt like the flows here and the bid under this market will show itself. And I think it will continue to prove to be a great place to have capital invested, but it will be bumpy along the way. So that's Bitcoin, gold, bonds, China. I think that is everything I wanted to cover in today's video. I'll leave you with a couple of stocks that had some big moves this week on the upside here. It's a short list, but let's look at them really quick. We've got AppLovin here, which continues to just absolutely dominate, 35% up. Intel, which had a huge move this week, up 23%. CVS up 20%. Airbnb had one of its best days, 19% week. And then Ferrari also 13% week, breaking out to new highs. Those are some large cap stocks making big moves, and I'll leave you with that into the weekend. So that is all I have. As always, thanks so much for tuning in. We've got a long weekend ahead of us, short week ahead. Hopefully this video was helpful. If you liked it, please do, subscribe to the channel, like the video, and don't forget to check out those links in the description if you want more for TC2000, IBD, our sponsor, or if you just want to get a hold of me and talk about your strategy, I can do that as well. So have a great weekend. Take care. We'll see you back here next weekend.